In February, activity in the US manufacturing sector slowed down more than anticipated, mainly due to weak demand and the rising inflation. Prices have already started climbing partly because of tariffs. If the US imposes tariffs on the goods from Mexico and Canada and doubles tariffs on China, the economy could weaken even more. Let us focus on a macroeconomic data and its effect on the currency trends. You are watching Traders Calendar on a March 7. Interestingly, European economic indicators continue to show positive trends. For example, a decline in Germany's construction sector slackened. And in January, the construction PMI rose from 37.8 points to 42.5 points. In February, economists expect a further rise to 44.00 points. If the actual data meets forecasts, the euro could gain some support. The UK construction sector, on the other hand, unexpectedly slowed down. After 10 months of growth, the index dropped to 48.0 points, falling out of the expansion zone. One of the reasons was economic instability. However, in February, the index may rebound to 49 points, which could support the pound sterling. Retail sales in the Eurozone continue to rise. In December, growth accelerated to 1.9%, and analysts expect further acceleration to 2% in February. If the actual data matches expectations, it will be another positive signal for the euro. Since the week will end with one of the most crucial reports for the markets, namely US non-farm payrolls, all related data will be closely watched. According to Challenger forecasts, the number of job cuts in the US could rise from 50,000 to 56,000 in February. This would be a negative signal for both the labor market and the dollar. The euro might still hold its ground regardless of another expected rate cut by the European Central Bank. Although rate cuts are generally negative for a currency, markets have already priced in this decision. However, the ECB press conference, scheduled half an hour after the announcement, could increase volatility in the euro-dollar pair. Meanwhile, initial jobless claims in the United States are expected to rise again, especially after the wave of layoffs among federal employees. Some analysts predicted the number of claims could surge to 340,000, which compared to the usual increase of 20 and 30,000 would be a significant jump. If the data confirms securing labor market, it will put additional pressure on the US dollar. The dollar's decline could continue due to reports on the United States and Canadian trade balances and the expected rise in Canada's PMI. Forecasts suggest the index could climb back into expansion territory at 50.6 points in February. Even so, the Canadian dollar might strengthen against its US counterpart. Additionally, several key central bank officials are scheduled to speak, and their comments often trigger market volatility. So please note that the time of our publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Thursday, March 6. And we will monitor the market reaction to the all above mentioned reports. Subscribe to the channel and follow changes in the market sentiment with us. Any comments, any questions and offers are welcomed. We wish you profitable trading and see you soon.